Welcome back now. South Africa's inflation edged higher in November. According to Stats SA, annual consumer price inflation was 2.9% in November, up from 2.8% in October. The CPI remained unchanged month on month in November. Meanwhile, retail trade sales increased by 6.3% year on year in October, with general dealers contributing 4.9 percentage points. Gina Schoeman, Economist at Citi, joins us now for further analysis on both prints. Thank you so much for your time, Gina. Let's actually start off with that inflation print for November. That year-on-year uptick from October to November, is that really negligible? Also considering the fact that month-on-month, that remained unchanged.
Yes, absolutely. I wouldn't look at 2.9 versus 2.8 last time and say that that was an increase or a rise. If anything, I would say this is a big downside surprise. You know, all of our forecasts expected a much bigger increase to 3.1%, but instead it was only 2.9. And also, let's also remember, even if we had all been correct, and it was not a downside surprise, and it had gone up to 3.1. That is still a very, very low inflation print for South Africa, keeping in mind our 3 to 6% target range with a midpoint of 4.5%. So that downturn in inflation certainly here to stay.
It's quite interesting that you say the forecasts were leaning more towards 3.3%. I mean, this print's still below 3%. What surprises were there that maybe make up the difference between the expectations and what actually came out?
Well, certainly in our case, as much as we expected food inflation to continue moving lower, it actually came out far lower than what we were expecting, just over 1.5% year on year. Now, I know that a lot of people say that they don't really ever feel lower food inflation on their grocery bills, but wow, the food disinflation, so the lower food inflation that we've been experiencing in South Africa, has been a big contributor to this lower inflation number overall. But something we did expect and came out in line with expectations, which is also huge relief, has been fuel inflation. You remember we were going through huge fuel price hikes a year or two ago, and that persisted quite a long time, given all the various geopolitical tensions and the oil price and the currency, whereas that's something that is also certainly a big relief to consumers. So I think the combination of food and fuel coming down, that's not just the biggest driver of this disinflation path, but it also does go a long way in helping consumers that maybe have a much bigger proportion of food, public transport, and fuel in their basket than maybe some others.
Yeah, well, it's quite interesting there when you talk about food, because when I spoke to a lot of people before, there seemed to be this narrative of there's a risk in terms of upside that we could see there, particularly looking at abnormal weather patterns. And I'm wondering if that maybe has dissipated, at least in the short term.
So that is absolutely correct. We did have an El Nino effect, and we had a drought that actually affected our GDP numbers in Q3 negatively.
Yes.
I mean, it was all because of maize production declining that Q3 GDP disappointed to the downside. And naturally, if that production slips and supply is lower, you would immediately get concerned about the price effect. However, South Africa is sitting on a nice amount of stock of maize prices. So not only do we have sufficient supply locally still as a hangover as such, but we also have an incredibly competitive retail sector when it comes to food. And that drives actually a lot of prices in favor of the consumer in order to attract more footfall into the stores, and particularly on food items that, again, are the ones that are the most sought after. We're talking about bread, we're talking about milk, you know, we're talking about the things you really need on a day-to-day basis, not necessarily your luxury food items.
All right. Well, Gina, we are in December. Let's take it back to October, because the print for retail sales for October came out today as well. There was an uptick. Would you take a look at that rise as significant? Maybe also that it was also linked to the good inflation that we saw in October.
Yes, I actually would say that, you know, for retail sales in October to rise above 6% year on year, that was not just much better than expected, but might actually explain why the September number was a bit of a disappointment. Now, when it comes to year on year, of course, we are coming off a very low base. We had a negative print last year, October. However, if you look at the month-on-month numbers, you're still seeing quite a lot of activity. And if you look across the disaggregation of retail sales, it's coming a lot from things such as pharma, personal care, semi-durable goods like clothing and footwear. There was something in general dealers, which is your grocery stores. But, relatively speaking, I think this is the combination of three elements. In September, we got the two-pot reform and all those withdrawals that have been reported to be much stronger than expected. Now, people did think, why did this not show up in the retail sales numbers for September? But perhaps it does take a little bit of time for people to actually go and get the withdrawal and then decide what to do with it. And it's not to say necessarily that all of this went to retail sales, but even if a big portion went to debt servicing costs, it opens up the ability to then spend in the retail sector on other things with your usual amount of disposable income. But I would say the most powerful driver of here is that inflation rate. Low inflation really is the big powerhouse for consumer spending, just because of how much it determines real disposable income in South Africa. And you must remember that CPI in October was at 2.8%, and that's supposed to be the bottom of our CPI trajectory. You could add into that the 25 basis point rate cut that the SARB decided to do towards the end of September. So I think if you take all three of those things together, that might very well explain why suddenly October retail sales start to look much stronger. And it does really help that Q4 GDP number, even if it's only the very beginning of this. This is certainly going to be helpful when we think about the GDP trajectory going forward.
Yeah, it's really also just interesting seeing the different performances in those retail categories. And quite interestingly, the negative contributor still remains that hardware and glass category. Of course, we've had companies like Italtal telling us of the deeper challenges that they are experiencing there. So it's going to be quite interesting to see what comes out for November and December. Thank you so much for your time and for your insights today, Gina. Really appreciate it. That was Gina Schoeman, economist at Citi.